How does the macroeconomy impact M&A?
So when usually when we look at the macro, we look at the US because ultimately that's where the money is. So follow the money. But it's also where other countries look to ensure that their strength of currency matches up to the US. Now, if you look at the US and their Fed fund rates, well, after the pandemic and combating inflation, they needed to raise those rates to put a little bit of cold water on the economy. It was too hot. Inflation was out of control. So they rose interest rates, and that had a fairly negative impact on spending and consumer confidence. So that has a trickle down effect in our industry. Eventually, consumers are spending more money on their mortgages and still having to deal with inflation, so they have less money to spend on gambling. So the disposable income impacts their ability to give the gambling companies money. And that will have a slowing effect on the online gambling industry. We don't suffer in the same way that other industries do. So retail industries are typically, luxury brands and clothing. These industries have a much higher correlation with the ebbs and flow in interest rates. The gambling industry, being one of a vice like alcohol, tends to have a slightly lesser impact, and that has been felt. There have been certain companies who have laid off certain individuals. Better Collective have had a tough time of late, perhaps not due to consumer confidence, but that's another matter. But ultimately, we do see in an economy where the interest rate hikes impact the wider economy. And that doesn't necessarily impact the smaller companies because they're still making money. It does tend to have an impact on public companies and general sentiment within the investor community. So when the markets are bearish, money is tight, investors are less willing to part with their cash in in terms of their risk appetite. That tends to flip when the economy starts to boost. Money supply, liquidity tends to enter the market, and that will eventually find its way into investors' hands, which eventually trickles down into the gambling industry, which stimulates investment, and it also, paves the way for transactions, leverage buyouts, and those type of things.
That's very interesting. So, shall we speak about public perception?
Sure. I think the industry has certainly matured over the years that I've been in the industry. I would say number of deals that we're seeing by large VC and private equity companies is evidence that it's becoming a little bit more palatable. I think there's still a large cohort of private equity and venture capital that still won't touch the industry. But there have been new entrants in recent years with the likes of Brune Capital coming in and taking in position with OddsChecker. So I think we will start to see more companies coming into the space who will recognize that the US, for example, not being fully regulated, and a lot of the growth in the US market is still to come. And with sports betting, at least, being a very socially acceptable pastime in the US. It's very much ingrained in their culture. We might see a shift in sentiment which will favour the online gambling industry in the years to come. I think in terms of the wider sentiment, if you look at regionally how gambling is perceived, it tends to depend upon which political party is in power in which particular country. So we see the likes of the Netherlands being very conservative, being very restrictive. Similarly, in countries like Germany, where they feel that they need to overburden regulation, and that's, I guess, going back to the point around over-regulation and what the risks are to those regulators, or the government itself. Typically, they're trying to raise tax for their strained economies, and if they start to create an environment which is uncompetitive, then it negates the purpose of their original intention to raise capital and obviously protect consumers. So if we see further restrictions in the Netherlands, for example, we are likely to see an influx of crypto casinos and sports books that subvert that regulatory oversight.